Okay, so I want to show you guys a little something here. Using the Keltner channel, using the MACD, which is the 310 oscillator, and using the two time frames working together. This is a trade we did this morning for our trade signal services. You could see we entered and then we covered lower. All right, and that was a trade right there. So let's go through everything and see what we were looking at the time. So let me okay. What I want to point out is these three pushes up here. Now the market had been extended up after a prior day. It's had a really strong move up, a trendy day. So the next day we're looking for any type of a push up for a short. Now when you're expecting a consolidation day, what's really good to use, you can use Bollinger Bands, you can use Keltner channels, but you can combine the lower time frame and the higher time frame. So in this case, if we look at the higher time frame, you had up here your Keltner channels, right? So that shows that the market is getting extended. We tested down below to the lower Keltner, came all the way up, and then tested up here. What it ended up doing was doing 1, 2, 3 drives. So typically when you get 3 little drives, it ends a move. And I look at the MACD that we have over at IMarketsLive. And this is, I had gotten from Linda Raschke, which had gotten it from Walter Breschert over the years. So here's your first drive. You can see the market pushed up. The next move up made a higher high and a lower high on the oscillator. Then it came back and gave the third push up. And you had an even lower high on the oscillator. And you can see the oscillator was making a little divergence move. Okay, meaning that it was prices going up and the indicator was making lower lows. All right, I got a little sniffle here. So being extended on the higher time frame and getting a little divergence pattern, that set up an opportunity for us to short. Now I didn't want to short up in here for the fact that the market was coming off of extreme strength from the prior day. So the market pulled back and then had another push up. And what I ended up doing was I put the fib tool. All right, I put my Fibonacci tool. All right, and I like looking at 50 to 618. I just like looking at that. It kind of puts everything right into perspective, that 50%. Here it is, the 618. And soon as it started coming up, we started shorting into it. All right, and my risk was right above the high, but I was looking at this whole zone of where price can come. Where can price come? And once it started stopping going down, started correcting, you had your oscillator correcting. You can see it right here. And that was the trade. The trade was basically you get in, you set up the short, and then you want to basically kick it out on the way down. All right, so that's essentially the trade. All right, and that's what I was doing this morning for my work. All right, so that's what you have here. So first things first is your higher time frame. You're seeing that it's pushing up into a resistance area. Your lower time frame, you're looking at little patterns to get you in using the oscillators. Market breaks down, you're still using that oscillator. I added the fib, and you start working it lower. And that's how basically I use the lower time frame and the higher time frame with the MACD. And that's it.